Spot Bitcoin exchange-traded fund proposals from Hashdex and Franklin Templeton have prompted the US SEC Commission to announce the next stages in their review process. The agency has asked for written feedback on both suggestions about whether to accept or reject the applicant's Forms 19B4. Separate from Form S1, the offering prospectus that is subject to clearance by the Corporate Finance Division SEC, Form 19B4, a public disclosure authorized by SEC Trading and Markets Division. After being published in the Federal Register, the SEC's requests are open for comments and answers for 35 days. The applications of proposed rule modifications that would permit ETF trading were submitted in late September. Franklin Templeton's on CBOE BZX and the New York Stock Exchange's Arca would both be trading venues for the Hashdex ETF. The SEC extended the deadline for making a decision on the applications on November 15. The inquiries deal with matters pertaining to the approval of ETFs. Commenters are welcome to evaluate funds' vulnerability to manipulation and the significance of exchanges hosting them. Commenters on Franklin Templeton are also asked to think about price manipulation on the Bitcoin market, correlation between spot and futures prices for Bitcoin, and the company's surveillance sharing agreement with Coinbase, which would help with price discovery and supplement efforts to detect manipulation and fraud. The suggested fund structure from Hashdex is more intricate than Franklin Templeton's. The proposed Hashdex Bitcoin ETF would be set up as a futures ETF holding Bitcoin at the spot price. Instead of relying on a surveillance sharing arrangement with Coinbase, Hashdex would purchase Bitcoin from other exchanges on the CME and use that method alone for pricing. The size of the CME in relation to the fund structure and the availability of enough liquidity were the two questions posed by SEC. Lastly, questions regarding sponsor Torosso Investments estimations regarding the correlation between the price of Bitcoin on unregulated exchanges and the CME are posed to the commenters. The fund is controlled and managed by the sponsor.
Binance founder and former CEO Changpeng Zhao will relinquish his position as the chairman of the global exchange's US affiliates board. This was not a part of last week's massive multi-billion-dollar settlement between Binance and various US regulators and law enforcement entities. Zhao will transfer his voting rights to a proxy, Binance US announced in a tweet. That said, as CZ transitions to life after Binance, he has decided to step down from his role as a chairman of our board of directors and transferred his voting rights through a proxy arrangement whereby his interest in the company is purely economic and he will no longer be involved in our governance, the tweet said. Binance was accused of operating in the US without registering with any appropriate entities, ultimately allowing US crypto investors to transact with Binance customers from sanctioned regions. The company agreed to pay $4.3 billion, making a complete exit from the US as a part of its settlement and accept Zhao's resignation as CEO. A senior treasury official told reporters that Binance US was not part of Binance's settlement as it was registered business. Binance.US continues to be led by Norman Reed and our existing experienced management team. We are well capitalized to continue to build and grow our platform, and to do so, we renewed clarity and momentum while maintaining the same customer-first commitment, the tweet concluded.
Digital Currency Group and Genesis Global have reached a repayment plan to settle their lawsuit, according to a new bankruptcy filing. In September, Genesis filed a lawsuit against DCG, alleging wrongful possession of over $620 million in loans and seeking repayment, interest and fees amidst Genesis' ongoing bankruptcy proceedings. So far, DCG has paid approximately $227.3 million of $620 million it owes. The deal would see DCG pay another $275 million to Genesis in 3 installments, partially in US dollars and Bitcoin, due by April. The deal also includes a $35 million upfront payment and $10 million holdback from the recent sell-off of CoinDesk. According to the filing, DCG is also pegging Grayscale Trust shares as security. While the deal won't fully repay the debt, as DCG owes Genesis a total of $324.5 million, it will keep the two companies out of lengthy and expensive litigation. The deal still needs to be approved by creditors. That's all in this special segment. For more such updates, watch 3.tv or log on to our website www.3versetv.io or scan the QR code. Thank you.